Okay, so that leaves us with the three states that are probably on the not act list for 2016. And for us, that's Northern Territory,
Yes.
Western Australia,
Yes.
and Tasmania. And I think poor old Western Australia largely is the one product, one customer town, and they're really suffering from a bigger picture from the drop in the iron ore price. So I think a lot of people are feeling the heat over there, and rental returns are suffering big time. So I think that my old hometown of Perth, it pains me to say, but at this stage, not on the radar for us from a borderless investment perspective to be buying in Perth.
Yeah, for me, it'll probably come into the watch category second half of 2016, just to see how it's going, because I suspect we're seeing slowing population growth, if not maybe even negative population or migration. So whereas when you've got a capex expenditure like they were doing, and it's quite livable, isn't it? It's a beautiful place, and more better days than worse days in terms of weather-wise. So from that point of view, it's good. But if the job opportunities and the incomes that were touted before are no longer there, considering that they're still finishing off a lot of those subdivisions and new house and land areas, just says to me that, we look at the supply side, or we look at the vacancy rate starting to creep up. So from that point of view, that's why it's on a no act now, but might come back onto the watch list, or it could stay on the no act for the rest of 2016.
We know some people that are buying in that market, and they're looking for opportunities to add value to the land in terms of subdividing and land banking. And so again, in terms of that preemptive accumulation phase, if you know what you're doing, the negotiating conditions work well in your favour. So there's always opportunity in any market. Yeah. And again, 70% of the market is buying for somewhere to live. But in terms of whether or not we would be sort of actively looking in the first half of 2016, as you say, there's probably better opportunities.
Yeah, I think the economic prosperity there, the GDP will start to slow a bit more. We're starting to see that in a rising unemployment rate. So for me, it's sort of just saying, look, I'll keep it in the distance. We'll keep running the ruler over it. Our data allows us to do that pretty quickly. But right now it's non-act. It's a sit on the sidelines. We've got them on the bench.
We do have it on the bench. Northern Territory, largely represented by Darwin. A huge oversupply of apartments.
There we go again.
In the Central Business District. CBD stands for could be dangerous. So I would suggest that people... I mean, if they're watching our Outlook videos, Ben, and they don't get the message, no greenfields, no house and land, no brand new apartments. And I think that Darwin had a good run only sort of a couple of years ago.
Was the top performing city in the last 7 years outside of Sydney's last 2 years. So that just goes to show you the gas projects. It's got a lot of untapped raw materials and minerals that are available in the Northern Territory themselves. Well, they're going to run through a port. That port is most likely going to be the Port of Darwin. We've just seen a new lease go out for that new Port of Darwin, so there'll be some Chinese money spent on that. The Americans haven't even arrived yet, so that's why it's sitting on the bench, but I'm probably a little bit more excited about how quickly a marketplace like that can turn, because it's such a small population base that if the economy twigs, and switches on, then demand is real quick, and because you can't build supply into that quickly, because you can only build roughly for 9 months of the year, it's slow. So you can really see some very bullish yields quickly, and some really sharp vacancy rates coming quick. So that, to me, you might pull them off the bench, and you might get some early possessions if you do, but at this stage we'll keep it on the bench.
Great sporting analogy there. I knew it would be thrown in there. And then last of all, we got Tasmania, so typically Hobart.
Yeah.
And I think the affordability in Hobart is phenomenal. But they, tourism, retail. So their unemployment is a challenge there. But at some point in time, when you've had Sydney and Melbourne, and then Brisbane, and then Adelaide, it's largely people are going to start to look there and see opportunity for potential growth and yield, but not yet.
Yeah, look, for me, I was down there, I think just before Christmas, and I went down to the wharf area there, and it's quite nice. It's sophisticated. The food is always fantastic.
It's my favourite place to go on the show when we're filming location. Whenever it's a Tasmanian story, I can't wait to get down there.
Fresh produce is amazing down there. So, and I think with a growing population, their tourism story and their organic and natural beauty story is everything about where they want to take their profile and their brand. And I think that's going to be important for them. So that does say to me, okay, well, they're in and out. So, you know, if I was had short-term accommodation, that could be a good thing. But in terms of, you know, what do the staff earn when they're working in the restaurants, the bars and the hotels? Not a lot. You know, it will have a spike, because if you look at, you know, if you overlay even the average income and even the social welfare payments compared to what you can buy some of the houses down there for, it sort of does say to you, wait a minute, there's a bit of growth in there. But it's, you know, I just can't pick that market easy. So for me, if I can't understand when I see the cycle turning, I'm not going to play there.
Agreed. So Perth or Western Australia, Darwin/Northern Territory, and Hobart/Tasmania on our non-watch and act.
I'll throw a little sneaky one in there for those who've hung around on the video, and I'll say this, that Western Australia, Broome is going to be of interest to me probably in the second half of 2016. And I say that because Broome passes the livability score. And, you know, so what I want, and it's been depressed. So if I think medium to longer term, be fearful when others are greedy and be greedy when others are fearful, it could be a marketplace where you can get some really nice yield. And it could be some, you know, with some spiky growth. But again, it comes down to, you know, I wouldn't be doing it as my first investment. If you've got a decent portfolio and you wanted to have a little bit more of a risk-reward play, that could come onto the radar for me on the second half. So there's been a little smoky for the year. Any smokies for you?
Not quite as good as Broome there. For me, I like to keep an eye on the Tasmanian market. I think in, you know, Battery Point, Sandy Bay, Battery Point.
Yeah, that's right.
Some of those really beautiful period areas close to Hobart, and if you can pick it up at the right price. But
I agree. Well, it comes down to that point, doesn't it? It's like, you know, if we're looking at very selective markets in these city markets, those 2 or 3 suburbs make good sense to me as well. So there's Bryce's smoky as well.
There you go, folks. Well, there you have it. There's our Around the Grounds for property outlook in 2016. Of course, Ben and I are the co-hosts of The Property Couch. So if you're interested in getting the insider's guide to property investing, feel free to go to thepropertycouch.com.au. And we've got almost a year up, Ben, on The Property Couch. So there's about 50 odd episodes there that you can go and check out. And our tip for you, if you are interested in learning some information, is start from episode number 1.
Yeah, look, listen to one episode that might get your attention. If you like the content, then go back to episode 1. And look, we can't go past without, obviously, with, you know, blatant what is it?
Product placement. did anyone notice that?
Yes, did you get that?
Ben and I are really proud. In 2015, we wrote our first book together on the Armchairs Guide, hence the props, to property investing, how to retire on $2,000 per week. And we talk about some principles and some frameworks that you can overlay to build your portfolio. And I think the exciting part about that is 5 case studies.
Yeah.
And in those case studies, we're not talking about being a weekend renovator. We're not talking about buying 20 plus properties in 5 minutes. We're talking about conservatively building a portfolio that will set up your future for your family. Yeah,
for me, I think it's a start to finish book. In terms of, if I was just starting out, I've got some good content about mindset, money management. But if it's also for the more advanced player, there's some good strategic, you know, location area research and property type research in there as well. So it's a good start to finish and reference book for me. So
if you want to get a copy of that, you can go to empowerwealth.com.au/book or thepropertycouch.com.au/book, and you can get a copy there. And you'll be able to, we'll send that out to you straight away and you can check that out. And finally, if you're just interested in learning more about property investing, how to be a boardless investor, why not subscribe to our newsletter on empowerwealth.com.au, where each month, Ben, we send out a couple of videos each, where we give you up-to-date tips, insights into the market on how you can stay informed. Ben gives you some insights every month when the RBA gives their interest rate announcement. So there's plenty of resources for anyone who wants to stay up to date in 2016. So go to www.empowerwealth.com.au.